Hello, everyone. Another week's gone by. We have another cash secured put that's expired worthless, so we get to start it up again. So let's get to it. All right, so here we are logged into the Ameritrade paper trading account, and Marvell did a good run up again this week. And we had put in an order for a cash secured put at 44, so it stopped at 46.58 was the closing price. So that is another week down, some more premium in our pocket. The option expired worthless, so we got to collect and keep all of that. So let's jump over to the web application. All right, so here we are on the web application, myatmm.com. I've already pulled up the cost basis for Marvell. And let's see, this is the put, and it expired worthless, and there's actually nothing really to do. I do have expired in the drop down. You can go ahead and click submit, and it doesn't do anything. It does add this transaction, but really we just need to get rid of this because it expired worthless. So there's nothing really more to do with that one. And we are back to zero, back to the starting point on Marvell. We are ready to start the wheel up again on this stock if you chose to do that. And I am going to basically keep on running this. Once you've picked a stock, or I mean, this is my personal opinion, once I've picked a stock that's doing really well, I don't do technical analysis to determine when I enter and when I get out because of the way I run the wheel. I don't run the wheel just on one iteration at a time. Once I get into a stock, and I've already done it on this one once, but it ended up calling out anyway, so it got rid of both of our positions when I was running a put and a call at the same time. But I guess I could call that the continuous wheel strategy is what I run. And once I get into it, I start placing puts. So I'm playing both sides until we get called out. And we only got to do that 1 week on this stock, and it called us out immediately within that first 5 to 10 days of us being in it. But in any case, this one's a good moneymaker, so we're going to continue running that on this stock until maybe if the price gets too high. But I will say this is a demo account, so I probably won't let the price affect my decision on this one. So anyway, let's go over to Ameritrade and see what we can do for starting up a new cash secured put. All right, so here we are again over on Ameritrade. We were looking at the charts for Marvell. So let's go over to the Analyze tab to start looking at the next upcoming week's option premium. I got it filtered down here for some previous analysis I was doing on some stocks. So let's clear the strike price filter on that. All right, collapse all these, make sure we're looking at the right one. This upcoming Friday is the 10th. All right, so we want to look at an at-the-money strike price. So 46.50 because it's traded at 46.58. So we would want an at-the-money strike price because we're trying to do another cash secured put to get it back into the stock. And as I said previously, I don't do any technical analysis. I mean, I do look at the charts, and I guess I look to make sure it's not doing anything really crazy, like if it spiked way up or spiked way down. But I mean, if it's just doing its thing, going up and down, trending, just if it looks like this looks a little up, but I mean that's not uncommon. I mean, look, there's this drive down, but so it's still in this kind of range. You see this top and this bottom, so it's still in this general area within the past year. So nothing's really crazy to me. I'm not an expert technical analysis person by any means, but I know that's important to a lot of investors, and I was just making a note on that. So in any case, as long as it's generally not doing anything wildly crazy, I will stick with that stock. And I like trading at the money as often as possible, because at the money is where the option premium is. It's where the extrinsic value exists. And this chart, I'm looking at it now, this grid actually is not showing the extrinsic value. So let's change that real quick. Let's see if I can get that here. It would probably be, where is that? Oh yeah, it would be under the Greeks. I don't know why I didn't go to that straight up. All right, I generally do like looking at the delta for some things, but for that, the money, we don't really care about the delta very much. That's usually when I'm trying to play probabilities and looking for something less than or like more of a like a 15% or greater chance of being out of the money, usually when I'm running iron condors or something like that. So extrinsic value is probably the most important thing for this at the money one, just to see how much time value is actually in this. So if we switch that to extrinsic, we can see that of this $1.18 to $1.22 spread, there's $1.20 of extrinsic value. That's time value, guys. So pretty much the entire premium is all time value, which means this is going to start tanking like a rock in the next 5 days. It's going to start really drilling down. And actually, if we look at, let's see if we can pull up theta. Theta should actually show us the rate at which this will dwindle down. So let's switch over to theta real quick. Okay, so 12 cents. So it's going down 12 cents a day for the next 5-6 days or whatever till it expires this coming Friday. So that's the amount that it's going down a day. So let's switch back to extrinsic. I like seeing the total. And also, this is a good thing to look at. Extrinsic, you can see like the right in the money strike price, and then the next one down, you can see that this at the money or near the money, it's pretty much at the money, it has the most time value in it. And you can also see the same thing on the other side in the calls extrinsic. So see, this one has $1.07 of extrinsic value. So right here, you can see the in the money one, this 46.50 strike of call in the money, actually has the most extrinsic value on the call side. So it's not always this at the money one. Sometimes it's an in the money one. I will say that rule of thumb, I generally stick with the at the money one, not even rolling into this one. And the funny thing about it is you could, if you're, and I may actually switch my strategy up slightly to accommodate that, start looking at the extrinsic value. As a general rule, you just kind of always knew that the at the money one, not the right in the money one, had the most extrinsic value in it. Generally speaking, that's true. But in this instance, you can see the reason why that is the case is because it's at 46.58. So it's only 8 cents away from this strike price, and it's 42 cents away from this strike price. So it's a lot closer to this one, which is why this one has the most extrinsic value, no matter if it's on the call or the put side. That's why it has the most, because it's the closest one to the last share price, the last price that the stock sold at. That's why it has the most extrinsic value. All right, so back to the cash secured put. We're going to go ahead and left click on this one, which will add a proposed order down here. The spread is 118 to 122, so that's a 4-cent spread. So we should be able to get the mark, which is the middle of those two. All right, so let's just up this to $1.20. We're going to right click, confirm and send. That'll bring up our little prospectus or a little order confirmation. And as usual, I keep on forgetting to change the default. So this is doing 10 contracts, which we don't want to do. So let's go ahead and click edit. To come back to here, we are going to take that down to 1, and then we're going to hit confirm and send again. There, that's better. For the demo account, to keep this realistic for, a lot of people on average could trade this. So that's kind of the example I'm wanting to show in this demo account. So here we go, 120 premium collected, 65 cents is the fees, and that's what it should come out to. I'm pretty sure they do tack on some regulatory fees, so that would be in the final transaction. But anyway, let's go ahead and click send, and then we will wait for tomorrow, Monday morning market to open, and we will monitor and make sure that this transaction goes through. We don't want to drop the ball again like we did that one week where we just missed out on all of the premium. So, and it's kind of funny if you think about it, because I was looking back at the premiums that we've collected for January and February. We've collected over like $650 on this one stock just for the first month and a few days into this next month. And we actually missed out on some premium. So it would have been more than that had I not dropped the ball on that. So in any case, yeah, we should be able to collect another $120 this coming week. And, looking at the chart, it looks like it will come down at some point. I mean, it is generally it's continuing to go up. So we may get into this stock at some point. Eventually, we'll get back into the stock. I do like getting into the stock because then I can play both sides and make double the premium. Generally, it's not double per se exactly, but it's more than you can collect on just one. So I like being able to play both sides because you generally collect a lot more premium when we're able to do that. So in any case, we'll see how it goes. Want to thank you for watching, and like and subscribe if you haven't already, and be sure to go out and get your free account today if you haven't gotten your account yet at myatmm.com. Thank you guys. I'll see you in the next one.